on disability the next day. It's going to be weeks, months, or years. Okay, the average advisor is not going to remember this if they don't sell disability. So don't expect a client who discusses disability once or twice with their advisor to remember any of this. So if your client wishes to choose a different regular occupation from a different benefit period, they can do so. I do recommend that they take really good notes though. And put them in your file, get them to sign it if they wish to do that, and put it in your file so that when the client does claim on disability, you can remind them as to what they chose. Okay, so superior disability, it pays out in the event of an accident or accident and illness. So you have the ability to choose if you want to go with accident only. Unlike AxeJet, accident coverage does not cover soft tissue injuries. With AxeJet, you can get accident and it covers soft tissue injuries. Here, if you're looking for soft tissue injuries, you do need to apply for the illness coverage as well. Superior, unlike AxeJet, covers you automatically for 24 hours. With AxeJet, you can choose outside of work or 24-hour coverage. I always recommend 24-hour coverage. Okay, because no matter if you're at home, at work, or participating in sports, you are going to be protected. I've seen cases where, that wasn't the case. People chose with outside of work coverage, and then they ran into issues. Target market. Superior is available for the self-employed employees with and without group insurance because you have the ability to top up their group insurance. That's why it's so important for you guys as advisors to have those conversations with your clients to discuss group insurance and go over group insurance coverage. So it is an income replacement product. So you do have to have an income. I get asked questions if my client gets paid in cash or if they don't declare any income, then no, they cannot apply for any of our disability products except for the AXI 7. Okay, the AXI 7 is only available if you're not declaring income or if you're being paid in cash or if you don't have an income at all. Like I said, it pays out in the event of an accident or illness or accident only, and there must be a loss of income. Now, the reason I don't recommend Superior or AxeJet for MDs, SMDs, or higher is because when they become MDs, SMDs, or higher, they have teams. When they have teams, they continue to make an income. If they continue to make an income while they are disabled, well, that's going to affect their benefit, reduce it, or maybe negate it altogether. The benefit period is 2 years, 5 years all the way up to age 65. It is a more comprehensive coverage. The benefit itself is a non-taxable benefit. So no, you don't have to pay tax on it. Having said that, a lot of people ask me, can you have my corporation pay for my disability? You could potentially, but it's important that you realize that if you do that, that there's a possibility that your clients might have to pay tax on the benefit they receive. What some people do is they have the corporation pay for the benefit, and at the end of the year, they issue a taxable benefit to the insured to avoid taxation. Now, we also have an integrated and a non-integrated benefit built into Superior. So that's something to consider. Okay, up to $2,000. And you have the ability to integrate benefits with group insurance. You could have a different type of coverage with with IA or with a different company that's individual. And then you can also have private and government programs like WSIB or employment insurance. And that when you combine the two coverages, so those coverages plus the IA coverage, that becomes an integrated benefit. Now you have the ability to have a non-integrated benefit of up to $2,000. $2,000 for a period of up to 2 years. Okay, so if your clients have coverage elsewhere, there is a possibility of having up to $2,000 worth of benefits from Industrial Alliance. But this is only important when your clients have coverage elsewhere. Okay, If they don't have coverage anywhere else, they don't need to worry about non-integrated. They should always go with integrated. And if that changes in the future, they can go with non-integrated then. Okay, so some of the features of Superior, it's a non-taxable benefit of up to $15,000. It doesn't mean that you're going to get $15,000 right away. It is income-based, so you have to prove income to be able to qualify for the amount. So depending on the income, you're going to get a benefit based on your income up to $15,000 per month. It provides you with 24-hour coverage in case of an accident or illness, no matter if you're at work, at home, or participating in sports. That non-integrated benefit of up to $2,000. Waiver of premium is built in. Okay. Waiver of premium is built in. So that's not an additional rider. If your client becomes disabled 30 days after the initial benefit is paid out, that is when the waiver of premium kicks in. And then it continues while your client is disabled. When your client goes back to work, the waiver of premium stops and you need to continue paying your benefits. You have the ability to get a retroactive benefit, but you do have to be disabled for at least 60 days. So I have a waiting period of at least 60 days and you have to be disabled for at least 6 months. You can add return of premium. Okay, the way return of premium works is not the same way as it works with critical illness. Return of premium works the following way. It's 50%, not 100% of your premiums. It's 50% of your premiums, minus any claims. You have to have the policy in force for at least 10 years, but you cannot apply for return of premium until the age of 50, 55, 60, or 65, okay? So it's important that you keep that in mind. Okay, it's not good enough for you to apply for coverage, apply for the return of premium right after you get the coverage. You have to have at least 10 years, and then you have to be a certain age to qualify for it. And it's 50% minus any claims. So if you claim on it a little bit, that'll be deducted from the 50%, and then the difference will be given to you. So I usually tell advisors that if they have a high risk occupation, they might want to consider partial disability instead of return of premium. If there is a high risk of claiming, that is something you should definitely consider. But if they're looking to insure somebody that potentially has a low risk of becoming disabled, they should consider return of premium. You can extend your regular occupation from 2 years to 5 or to age 65. And you also have the partial disability option available. If you're a seasonal contractual worker, you have the ability to get superior coverage. Seasonal and contractual workers do not qualify for coverage under Oxygen, but they can qualify under superior. Okay, and then indexation of benefits is available while you are disabled. So who's eligible for superior? Anybody between the ages of 18 and 59. Okay, you have to be working at least 21 hours per week or 1,050 hours during an 8 or 4-month period in a year. You have to be a Canadian citizen, a permanent resident, or temporary resident, and you do have to go through underwriting criteria. Okay, their underwriting criteria will depend on your age and the amount you're looking to get coverage for. So if you are a temporary resident living in Canada and you are here on a work permit, you can still get coverage. If you are a temporary resident living in Canada less than 3 years, not working less than 3 years, living in Canada less than 3 years, you can get superior with a waiting period of 90 days and a benefit period of 2 years. If you are a temporary resident living in Canada more than 3 years, there are no restrictions and there are no limitations. So if your client is close to being in Canada as a temporary resident 3 years, you should connect with them and change their waiting period and change their benefit period if that is the case. Now, this is only for temporary residents. If you're a permanent resident, there are no restrictions or limitations. Unfortunately, nobody is safe from the unpredictable. As I've already mentioned, anything can happen. You can't foretell the future. But then a lot of advisors are worried about the objections they might come across. So let's clear up some of these objections. Your clients might say, I already have my group insurance or I already have my government program. Well, that's great. Unfortunately, these aren't for everybody. Keep in mind that some government programs have limitations regarding the severity of the disability or the place where the incident occurs or how long the payout might be. WSIB is a great example. WSIB pays out only if the incident occurs at the workplace and is workplace related. If it occurs at the workplace and is not workplace related, then it will not pay out. And I have had cases where that was the case. So that's why it's so important to have 24-hour coverage. Now, keep in mind, if you have WSIB, it only covers you at the workplace. Now, your insurance policy from Industrial Alliance will cover you for outside of the workplace, but also if an incident occurs at the workplace that is not workplace related. Now, keep in mind, if you do have an incident at the workplace and it occurs, you have an incident at the workplace and it occurs during the working hours and it's workplace related, you will get the WSIB payout, but you won't qualify for the Industrial Alliance payout because you can't get both. They are integrated benefits. On the other hand, group insurance, okay, only covers a portion of your coverage. Remember that if group insurance pays out, the maximum has the ability to pay out for is 66% of your income. 66%. It's not 100%. It is not enough to cover your costs of daily living and your expenses, especially your mortgages and your rents and your car payments and so forth. So it is important that you review your group insurance, the group insurance coverage that your clients have, and go over it and explain to them how much they will receive when they become disabled. You don't want to have a situation where a client doesn't know what their group insurance covers only until they become disabled, and by that time, it's too late, okay, to add anything else. So please make sure that you go over your client's group insurance coverage because sometimes they might have 66%. Other times they might have 30, maybe 40, maybe 30, maybe 50. And then if it's less than 66%, you have the ability to integrate it with something like Superior to get it to that 66% mark. But if your clients already have that 66%, you still need to go over their group insurance policy and explain to them that they have expenses that their group insurance will not cover, like the mortgage and the rent. And we have a product called Universal Loan that has the ability to cover your expenses associated with your mortgage and your rent and your car payments, specifically for that, where we pay the client and they use the funds to pay the financial institution. Not only that, but remember that with group insurance, you're only insured as long as you are employed. If you're changing jobs multiple times, you have to go through probationary periods. Probationary periods are no longer 3 months, they're now 6 and 12 months. Employers don't want to invest in their employees where they are worried that potentially employees will change jobs. So if something happens to you while you are on probation, disability will most likely not pay out, and therefore you will not receive an income replacement if you are only on group insurance. Okay, so that's why it's so important to have alternative coverages as well. People will tell you that they don't need disability insurance because they're healthy. Well, you don't know what's going to happen. You could be, walking across on the sidewalk potentially, and then somebody on a scooter, a bike, or a car hits you. That was not something that was in your control. This is not something that you can foretell. You could get sick. You might have family history. Even if you don't have family history, there are times where some illnesses come in and are debilitating and force you to not go to work. Okay, critical illness is great, but it should be complemented with disability. And same thing with disability is great, but it should be complemented with critical illness insurance. That way, you're either having one or the other payout, or you're having both payout. Now, if your clients say they don't need disability insurance because they know their family history, that's great. Keep in mind, though, we have that return of premium option where they get 50% minus any claims. As long as they've had the policy in force for 10 years, they can get the policy, their premiums out at age 50, 55, 60, or 65. Okay, people will tell you when they're young, they don't need disability insurance because they are invincible. As I told you in the previous graph there, that you have the highest risk of becoming disabled due to an accident when you're younger. When you're younger, you're taking on more risk. When you're younger, you think that nothing's going to happen to you, which is not true. That's why it's so important that you keep in mind that having disability when you're young, it's easier to get, especially underwritten disability. Why do you want to go with underwritten? Because simplified issue has more limitations and more exclusions. Underwritten coverage is underwritten at the time of application and has the ability to provide you with coverage and protect you through your entire working life. I just said that return of premium is available at age 50, 55, 60, and 65. It's actually 55, 60, and 65. Sorry about that. I'm not sure why I keep saying 50. Some people will tell you, I have savings. I can use those if I become disabled. Well, that's great, but what's going to happen if you're becoming disabled and you don't have disability insurance and you dip into your RSPs, TFSAs? How are you going to be able to retire? Because when you dip into those and potentially deplete them, in order to retire comfortably, because you will recover, let's say majority of people will recover from the disability. When you do recover, what happens to your retirement fund? How are you going to retire comfortably? How many of your clients are able to live off of their OAS and CPP alone? There's no need to dip into your savings. That's what disability insurance is for. Because when you dip into your savings, and when you get back to work, you not only have to go back and replenish your savings, but then you're going to have to return back what you have used, plus you're going to have to continue putting money away. So how much of that is going to affect your cost of daily living and your expenses? If you're a business owner, you have the ability to protect your overhead insurance. Okay, so by overhead insurance, I mean rent, heat, electricity, employee salaries, potentially vehicle if it's essential to your work. Okay, so if you're a business owner, this is great. Now keep in mind, there are two types of insurance that you can write off as a business insurance or a business expense. One of them is group insurance. The other one is overhead expense coverage. Okay, so these are the only two that you can officially write off as a business expense. If you are looking to write off others and if you have a good accountant, then potentially they have the ability to do that. But please keep that in mind, okay? So if you are looking to cover your overhead expenses as a corporation, you have the ability to get overhead expense coverage on its own to write it off as a business expense. We do have additional coverages that you can add. So as I mentioned, seasonal and contractual workers have the ability to have superior. You have the ability to get partial disability, where if you can't do more than 50% of your regular occupation, you'll get a 50% payout for up to 12 months. Return of premium. as I mentioned, 55, 60, or 65. Okay, so you do have to be, if you're 30, you have to wait at least until age 55. If you're 50, you have to wait at least until you're age 60 to qualify for the return of premium. And it's 50% minus any claims. Okay, 50% of premiums, including the return of premium rider, minus any claims. Additional riders that are available. You have the accidental death and dismemberment, accidental fracture, extended medical care due to an accident, and you also have travel insurance. The two I recommend most is accidental fracture and extended medical care due to an accident. Accidental fracture is great, especially if you have a longer waiting period. Sometimes fracture heal up faster than the waiting period kicks in, and therefore you have the ability to at least get a benefit payout, because the accidental fracture, depending on the type of fracture, is going to pay 10%, 25%, or 100% of the $5,000 or $10,000 benefit. But if you have a shorter waiting period, that's great too, because if you have a fracture, that means the accidental fracture pays out and the disability pays out. So that's something to consider, and it's very affordable. Only $4 or $8 a month. Extended medical care due to an accident. I always recommend this one too. It's $2.50. Gives you up to 100,000 combined coverage for things like physiotherapy, private nursing, ambulance transfer, stuff that OHIP doesn't cover. Okay, there are limitations as to how much it will cover per accident or towards an occupation, or towards treatment, but you will need to look at that into the contract to see the exact details. It's meant to supplement your extended paramedical expenses potentially. And then you have travel insurance, very comprehensive, for stays up to 60 days outside of the province or outside of the country. It gives you trip interruption, trip cancellation up to $5,000 per person per trip, and a lifetime maximum of $5 million. The nice thing about travel insurance is that it covers you, the insured, but it also has the ability to cover your entire family. Okay, so it's important to have that conversation with clients. If they like to travel, this is something you should definitely consider. If you're within WFG, there's a lot of trips happening throughout the year. You have Hawaii, you have Vegas, you have Sacramento, amongst others. I do recommend that if you are traveling, that every time you travel with travel insurance, making sure that you have the ability to be protected while you are abroad. And that's pretty much it for me. Keep in mind, a disability may change the life of your clients, but so will having insurance. There are CE credits for today. You will receive a CE credit automatically within a week or so if you were registered and attended at least 45 minutes of today's training. What I want to do now is go into the software and show you guys what the software looks like. So just bear with me a second while I'm launching the software. I will take a look at the questions that have been asked. Creditor insurance, can you explain a little bit more about that at the end? Yeah, creditor insurance is our universal loan product. It has the ability to pay up to $10,000 per month, depending on how many things need to be covered. So things like your mortgage, car payments, loans, lines of credit, your rent, you would add those up per month, and then you have the ability to have these pay out every month when you become disabled. It's not integrated with any of our other coverages, and that means it can pay out on top of other coverages. So please keep that in mind. It is an underused product. I do recommend that you get yourself familiar with it so you have the ability to go out and discuss it with clients as well. So hopefully that helps answer the question. Go back to the last slide, please. Okay, I'm sorry, but I cannot go back. we have a time frame here. We do have these presentations that are happening every week, and we do repeat them. So if you join us in the future, you will get the opportunity to see these slides again. If the insurer is traveling and gets injured, is there any restrictions around getting the claim approved? So this is a great question. It's a great question. Basically, if you're traveling and you are abroad, it is basically the same because it has the ability to cover you while you are on vacation. Keep in mind, this is not travel insurance. It won't pay for your hospitalization. So you will have to provide proof of disability. Your doctor will have to fill it out, and then they need to send it back in. We will review it and then approve it. Worst case scenario, you might have to come back here and have a doctor review it here and submit it here. My client came as a refugee. He's now on payroll. He's on work visa. Can he get disability insurance? If your client here is here as a temporary resident and has a work permit, and their refugee status is already approved, they are considered a temporary resident. They will be able to get disability insurance. Keep in mind, depending on the type of coverage, they might have to have a waiting period of 90 days or 119 days for the AxioJet. So please keep that in mind, okay? The benefit period will be 2 years. But if they've been here as a refugee as a temporary resident more than 3 years, that does not apply to them. They can definitely get the coverage and don't worry about those limitations. Axi 7 payable only once when the insured is in hospital. Please explain a bit. Axi 7 is a product that has the ability to pay out if you're looking for the hospitalization benefit for every day that you're in hospital. So anywhere between $75 and $350, depending on what it is that you're looking for. Please make sure that you remember that it has to be, they have to be in the hospital, be it because of an accident or if they're looking to add illness, it's going to be a little bit more expensive. So hopefully that helps explain that question. Is there a minimum number of days for travel insurance? The maximum is 60. There is no minimum. Okay, so let me go through the software with you quickly here. This is what AssuranGo looks like. Okay, so when you log yourself into the Advisor Center, when you launch AssuranGo from there, you will have the ability to launch it. I'm not sure what a refugee type 28 is. Sorry about that. If they, like I said, if they're a temporary resident and they have travel and they have a work permit, you can definitely apply, and then you'll need to submit the documentation to see if they qualify. So this is AssuranGo, and here you have the library. Okay, so here you will have the contracts, so all the ins and outs, limitations, exclusions. I recommend you get yourself familiar with that. You have brochures. Okay, so Superior, you have advisor guides, client flyers that you can send to the client. You have tools, decision tools, underwriting tools. Quite often, one of the questions that I get is if my client has 2 occupations, how do I insure them? Well, this talks about multiple occupations here. If your client has 2 occupations, it tells you how to figure out the occupation class, tells you how to figure out the income. If the client has more than 2 occupations, they do not qualify for disability insurance. So that's important to keep in mind. My business is something I recommend you check every single day. Okay, this tells you what's in progress, what's in force, what's closed, any advisor alerts. If you have a policy that's been recently approved, I had an advisor that had a policy recently approved and it wasn't being put in force. That's because there's a report. So there's an outstanding amendment or a report that needs to be signed. So you need to go into reports. So please keep that in mind. Okay, so let's get an illustration. Let's run a Superior illustration. On the right-hand side are your underwritten, potentially underwritten coverages. On the left-hand side are your simplified issue coverages. Okay, now the nice thing about this product is that it's web-based, therefore it saves the applications automatically. But keep in mind that even though it saves the applications automatically, you do still have to put your client's details, because you won't be able to, otherwise you won't be able to find your client. So while that's loading, there we go. Somebody's asking me what's the question between Evo and AssuranceGo. So these are two platforms. Evo Web is an electronic platform as well, but it only gives you the ability to have coverage for life insurance, which includes Access Life, which is the simplified issue, life insurance. It includes critical illness. Okay. Whereas AssuranceGo, you have your disability products and your other simplified issue products, except for Access Life. So we're going to provide the client's details here. Okay, date of birth, smoking status. That's a little bit slow, so just bear with me. First question it asks if you're eligible for employment insurance. A lot of your clients, if they are employees, they are eligible for employment insurance. What that means is if they become disabled, employment insurance pays out and IA pays out. Okay, so until employment insurance pays, our benefit will be reduced. After employment insurance stops paying, you have the ability to increase our benefit. You can choose to do that. Occupation class. So your occupation classes, depending on your occupation, you're going to fall into one of these classes. 4A is your safest class, least likely to become disabled. C is your riskiest class, most likely to become disabled. So you have your 4A, which is a teacher in an educational institution. 3A is an advisor. 1A is a PSW or a truck driver. C is an Uber driver. Okay, so keep that in mind. You have a definition for each of these here if you hover above the I. But if you're not really writing disability insurance, this might be difficult for you to understand. You do have a cheat sheet. It's called the occupation list. It's limited to 704 occupations. Not all occupations are going to be here. One of the most common ones is construction. Okay, that's too generic. Okay, construction could mean anything and everything. You need to narrow it down. Drywaller. Okay, that's a B. Roofer. That's a B. Painter. That's a B as well. So most likely somebody in construction is going to be a B. We're looking at advisors. Okay, you can't find advisors here. So you got to think outside of the box. Okay, not all the occupations I said are going to be here. Sometimes you got to think outside of the box. What's another word for advisor? Agent. Okay, so agent, we're throwing out insurance. C, broker. Okay, so an insurance broker without a designation is a 3A. So we'll click apply. Okay, then we move down to type of employment. Are they a business or a business owner? Are they an employee? Are they self-employed? You need to figure that out. Okay, how do they do their taxes? Depending on how they do the taxes, you need to look at their T1 general or the T2125. If they're a business owner, if they're an employee, it's just the T1 general. If they're self-employed, it's the T1 general, but different lines. Okay. Some of the more common questions I get is it net or gross? You're not asking the right question, okay? This is where you need to go to verify your client's income, because that's where we will go at time of claim. And we verify income at time of claim. You don't need to verify income at time of application. Now with Superior, you have the ability to lock in your benefit. If your client's been employed at the same or has done the same occupation more than 2 years, they have the ability to potentially lock in their benefit, but you'll have to provide 2 years worth of income statements. Okay, so that's important. Form you have, if you can't find any of these because your client's been in the business such a short time, you have a form to help you uh, help you pretty much present what the potential income could be. Okay, so if I could tell you I make $1 million, but really it's important what I show to the government, and if I show 70,000 on my T1 General, then that's what I need to put here. Then I choose accident and illness or accident only. We want to make sure that we always discuss accident and illness in the very beginning. If my client doesn't want my client doesn't want illness, fine, I can move to accident only, but I get my client to sign a form that says they're declining illness and the reason behind it. They date it, they sign it. You put it in your file, because when your client becomes disabled, you don't want to have a situation thinking where they're thinking that they have illness disability as well. Then you choose your premium options, 5 years or up to age 65. I always recommend going up to age 65. 5 years is like term insurance, it renews every 5 years. Unlike term insurance, we don't know how much it will renew by. Whereas up to age 65, it has the potential to have the benefit the premium remain the same to age 65. Keep in mind that we do reserve the risk or reserve the right to potentially increase our premiums. But if we increase our premiums, then we would have to increase them for everybody, not just your client because they're claiming a lot, just because everybody will need to have their premiums increased. Then when it comes to regular occupation and benefit period, I recommend having the same. So as I said, you can start off the conversation with 5 years. If your client says they are interested in up to age 65, you move it up to 65. If your client says, well, 5 years is great, but I can't afford 5 years, you can go down to 2 years. Okay? As you can see, the premium changes every time I go in here. All right? So, because my client has employment insurance, I have the ability to choose non-integrated up to $2,000. And then when employment insurance stops, I can get the remaining $2,000. Okay? So, having said that, because my benefit is $70,000, because my income is $70,000, my monthly benefit is $4,000. Okay, $4,000. If I didn't choose non-integrated, it will tell me how much I can get from the integrated benefit. The rest will be paid by employment insurance. Now, having said that, 4,000 is the maximum, doesn't mean the client needs to go with the maximum. They can go less than 4,000, but 4,000 is as high as it can go. Then you can go with partial disability. You can choose if your client is potentially a seasonal contractual worker. You can get your premiums back if that's what you wish to do. If you have overhead expenses, you can put those in here. Whatever the premium that comes up here, you can write it off as a business expense. This is the portion that you can write off as a business expense. You can add accidental death and dismemberment, travel insurance. For yourself. Or for your family. You can have accidental fracture insurance up to $5,000. Okay, that costs you $4, up to $10,000, that costs you $8. If you hover above the eye here, it tells you what type of fracture, how much it pays out. I've had people that have had, gone up on the ladder and broke their skull. I've had people fall down steps and break their hips. But there's other bones as well that have the ability to break, and those pay out 25 or 10% of that $5,000 or $10,000. And then you add extended medical care due to an accident. Okay, it comes out to $151.90. Okay, if my client says, fine, but I don't really can't afford that, I have the ability to go back, make changes to this policy. Maybe they don't need the return of premium. Maybe we can go with 2 years. Regular occupation and benefit period, and so forth, right? So if they're okay with that, I click on complete electronic application. If they're not, I can always go bound to accident only. and then that comes down even further. Okay, but remember, if you're going with accident only, illustrate accident and illness first. Get your client to sign why they don't want to go with illness, and then go with accident only. Okay, so there's some additional questions here because that's it for the training here. So let me just see. Can total disability be extended from 24 months to 60 months if the benefit period is 2 years if the client's still totally disabled? No, you get to choose. Do you want either 24 months or you want 60 months or you want to go up to age 65? Okay, you need to choose that before your client gets the coverage. Sorry, becomes disabled. So at time of application is when you choose. Now you can make changes if your client hasn't become disabled yet. You can make changes while the policy is in force. You might have to go through underwriting if you're looking to change certain things, but that's pretty much it. Once your client has become disabled, they cannot make any changes to the policy. Please explain integrated and non-integrated again. Okay, so non-integrated is if you have coverage that pays on top of existing coverage. So for example, universal loan is a non-integrated coverage. It pays out on top of any other coverage you might have. Same thing with the $2,000 of non-integrated here. It has the ability to pay out on top of the coverage you might have anywhere else. With the superior, it is non-integrated for up to 2 years. And you only need non-integrated coverage here if you have coverage anywhere else. So if you don't have any other coverage, you don't have employment insurance, you don't have group insurance, you don't have WSIB, don't have any other standalone disabilities, you don't need to worry about integrated, non-integrated, it's all integrated. You do have the ability to make a change down the line if you are, if you get coverage elsewhere to get integrated coverage, but that's pretty much it. If you have any other additional questions, you can always give me a call about that. Does the monthly premium change over time or does it remain the same to age 65? So I've already explained that. Ideally, it won't change, but if we do change it, we change it for everybody, okay? Not just your client. We would have to change it for all of our clients. I've been doing this for almost 6 years now. I haven't seen changes to the premiums. I've spoken with people that have been doing this 15 years and they haven't seen changes to the premiums, but there's always that ability that we have the right to increase the premium. If WCB getting paid, will IA pay out too? I'm not sure what WCB is. I'm guessing that's something from a different province. Keep in mind these presentations are for Ontario advisors, and only Ontario advisors can get C credits. But if this is WSIB, if you're gonna get WSIB, Superior and Oxygen will not pay out because you're already getting a high benefit from WSIB. What I would recommend if you have WSIB, go with universal loan insurance. Once they have claimed for the insurance, they get recovered and gets into accident or another illness, will this insurance be available? Yes. So once they've recovered, depending on what the difference in time period is between the recovery period, if it's the same illness or accident again, then it's reoccurring. Then it continues to add on to, let's say, the 5-year period or the 2-year period, depending on what you choose for the benefit period. But if it's something else, or it's been, more than 6 months since this has happened, then you have the ability to reapply for coverage again, and it's like reset. For accident, unless the client must complete a form and sign. I'm not sure I understand that question. Okay, yeah. So WSIB is the same as WCB in BC. Yeah. Okay, guys. That's pretty much it for me. We are just over 1 hour. So thank you very much for joining me today. I appreciate you being here. Hopefully, you'll have the ability to go out and discuss disability coverage with your clients. That is my goal, to get you to talk about it. And if you have specific questions, you can always come back and ask anybody on the team, especially when you're working on a case, you can relate to it better, and then we can discuss it on Zoom, in person, or over the phone. Thanks a lot, guys. Have a great day, and we'll see you next time.